What's up YouTube, welcome back to my channel. My name is Jehu of Wall Street. So I've not put out content for a while now because I've been trying to work on some things and then it's taking me a lot of time, but I decided to just give you guys a trade review because that's the easiest content I can make. And I'm a forex trader, so without wasting much of your time, kindly like and subscribe to this video and this channel, and let's get into it straight up. Whoa, welcome guys. Now we are back on the screen. So for the past 1 week, I've not had reasonable trades, and the ones I had didn't reach take profit, but they reacted at the zones I entered from. And right now, to just give you a trade setup that played out today using the model I always teach on this platform. So without wasting much of your time, let's go into it straight away. So when we go back here, this is the 5-minute time frame on EURNZD, euro versus New Zealand dollar, and as you can see here, price has been falling, so we are in a bearish environment. Price is always falling, and then we are looking for a high that's going to be swept. When we're in a bearish environment, what we have is lower highs, lower lows, lower highs, lower lows, lower highs, lower low. The moment we have one of these lower high that is swept, which is obviously supposed to be a change of character, but this time around it comes and breaks structure, which means it is a continuation of the trend and not a change of character. We're not going to expect price to come back into this zone after rallying around a long time, and then it's going to sell off from there. Exactly. So this is what happened on this chart, and I'm about to play it out to you in detail. So right now, let me also show you something before we go in, because these things, they happen on the charts every time, and sometimes they don't happen on some specific pairs, but at that same time they're happening on other pairs. That's why if you are trading this particular strategy, you have to be on different pairs. You're not going to be focusing on one pair at a time. If not, you might not see setup in 2 weeks. So on this place, we're overall bearish. So let's see what I'm looking for. We're looking for a high, a low, a sweep of that high, structural liquidity, then a break of structure and reversal to take out the structural liquidity, and then a sell off to another break of structure. And that's what happened at this point. Someone else might be wondering, market is just ranging, I'm not seeing a setup, and someone like me can be seeing this setup playing out. But no setup is 100%, so you always keep your stop losses intact. Proper risk management. After this high was taken, we had a little consolidation and we broke out to the downside and broke structure. Also, this setup played out a few days ago on, I think, BTC. I'm also going to show you guys after I'm done with EURNZD. So we had the overall downtrend, we're bearish, and we have been bearish all the way to this point. And I didn't take this trade, actually, I'm not gonna lie. I just discovered it this evening after the trade has played out. That's why I'm trying to catch a new entry from this point. I'm coming back to this also. So from here, we have our lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then a sweep of that lower high, which is supposed to be a change of character, but then market didn't change character. It came back and broke structure and continued lower highs, lower lows. So obviously this is what we look for, a sweep and a break of structure. We highlight this point as our protected high, and then this our sweep, this our break of structure, this structural liquidity that market is supposed to take out. And then there is something called a QMR, post Quasimodo reversal, and that QMR is an order block. Let me show you a failed order block. From this point, you know that if you're in a bearish environment, your order block is the last bullish candle before a strong bearish move. In a bullish environment, the order block is the last bearish candle before that strong bullish move. So this candle here you can see, which is not completely formed, is our QMR. Let me open it very well so you can see it. Yeah, so this candle in particular, let me circle it so that this candle you see here is our order block. This price was supposed to come back into the zone and sell off, right? But what the price do, it disrespected this order block. So this is a failed order block. That is why it is our QMR. That's the Quasimodo reversal. So we're going to wait for price to get back and respect this order block. So when another block fails, there is a backup plan. I hope that sounds interesting. So now let's go back to where we were. That's why I have to be reading price a lot, and because we're in a bearish environment, that's why we're looking for sales. Good. So don't be looking for buys in a bearish environment unless you're catching a reversal. So after price played out to this point, price came into this zone where we are expecting a sell. And what do we see in this zone? We see a head and shoulder pattern, and this pattern always occurs at the end of an uptrend, signaling a downtrend from that area. And as you can see, we have our left shoulder, our head, and our right shoulder all forming, let me remove this, our left shoulder, head, and right shoulder forming alongside with this QMR that we have highlighted, this failed order block that is about to be respected. So this means two different trading strategies are pointing to you to sell from this point. When you have two or more confluences, you're going to enter that trade with confidence, but always use a stop loss in case of manipulation. So as you can see, price kept selling, and we didn't have a reasonable bullish candle since after this break of structure and market sold down to this point. Then after the first bullish candle, we know that okay, obviously a reversal is stepping in, then we close. So after this, I saw this symmetric triangle and price was just bouncing. I know in a symmetric triangle, any point the price breaks through, you trade it through that point. If you have, there are different types of triangles. Actually, I'm going to do a video on that in chart patterns. So I drew out this triangle after these first two touches and this touch. When price came back here, it also reacted. It came here also, it reacted. And then I now discovered this support level on the 5-minute time frame. You can see price rejected here 1, 2, 3, 4, 5, 6, 7, 8 times. And then this was the breakout I saw. The breakout from this trend was this point. So it broke out and came and tapped on it, which was my retest, and then I started buying. So price actually tapped on it several times and even came below it, but I wasn't stopped out. Now I'm still expecting price to come into the support zone and buy off, because whenever we have a support zone, I think I'm giving too much sauce out here. Don't forget to subscribe. Whenever we have a support zone and price has been reacting off it, right, the moment price breaks it, you're not supposed to start selling. You're supposed to wait maybe for a retest, then it changes to sell, or you're going to wait for it to continue, for it to go above. When it goes above the zone, it will come back and tap into that zone, and then you are going to buy full margin. Because the reason is that the reason price broke down here was not to change the trend, but to collect the liquidity that is below these lows. A lot of stop losses and maybe sell stops, people that are planning to go short around this place. So price is going to collect that liquidity and use the liquidity to move up, which is what happened here. When I saw this trade played out, or in fact I almost closed, but I had this mindset that it's either it hits my stop loss or I'm not out. And that's how I just left the chart to avoid emotions controlling me. And then when I came back, it has pulled back, and obviously my stop loss was below this low, not on the low, so I wasn't taking out. And right now you can see we're already in profit on the first entry, and the second entry is already on the line. So we're gonna see how this plays out very soon. And then let me head over to the next chart I was talking about. Okay, let me just search it. Okay, good. So now we are back. This is BTC USDT. Alright, so here are the setups that played within the weekend. In fact, this one was really crazy. From Friday, we had a sweep of this high, and then we had structural liquidity here, and then we had this break of structure. But before this break of structure, we also had another high and a low, and a sweep of that high and a structural liquidity, and break of this structure and break of this other structure. Then price immediately reversed into this point, took out structural liquidity, and boom, TP hit. After that, we are reversing into this zone to react. But before then, we also had a high and a low, and then a sweep of this high and a structural liquidity and break of structure. So what do we wait for price to do? To rally into the zone, take out the structural liquidity, and boom, another TP hit. Then after that, price also rallied into this zone that I told you guys, this liquidity that's been resting here, and it made equal highs with the last liquidity, and boom, immediately, like, BTC is very fast, it just jumped down to take profit. So BTC can be very risky because of the movement and the volatility, but at the same time, when it's playing out your strategy, you're going to be smiling. So right here, I just entered this trade based off of my emotions, and you can see I was stopped out, but it's a very little lot size, so I think my loss here was around $2, less than $2. So these are our main focus where this played out, and 3 different times on one particular pair. So there are times that your setup will be playing out, and that's the time where you have to maximize your profits. Then when you have seasons like this where your setups are not showing, you're going to minimize your losses, because you're not going to make money every day, but when the good trading days come, you're going to be smiling. So thank you guys for coming so far as this. I'm sure you got value watching this video. Like this video now and hit subscribe button. So what's up, y'all? Welcome back from my screen. Wow, I believe this video was very interesting and very helpful to your trading journey and to my trading journey, obviously. So what I'll tell you guys is that always make sure you're trying to back test and apply proper risk management whatever you're doing, because the market is not owned by your parents or your family members. It's not your friends that are the market makers, so take caution. And risk disclaimer: whatever you're depositing is what you're willing to risk. Trade with wisdom, and always make sure you see a clear setup. Don't just be emotional like what I did. Just I feel like the market is going to sell, and then you go in. The market is going to buy from that point. So always make sure you're always studying, sticking to the process. Don't try to jump the process, because no one can jump the process in trading. I've never seen anybody that jump the process, right? It's not possible. It's just like there's a spirit that makes sure you go through that process, and if you try to skip it, you're gonna hit stop losses until you come back to your senses. So thanks for watching this video. Subscribe to the channel. Subscribe. Hit the subscribe button. Let's hit 10K by December. Thanks for following me. Peace.
Yeah, wait a minute, get it how you live it. 10 toes in when we standing on business. I'm Mr. Body Catcher, slaughter gang soul snatcher. Ain't no regular F-150, this a fucking rapper. No capper, street nigga, not a rapper.